Are you an active or non-active military person that wants to learn how to use your VA loan, or you have a VA loan and you want to learn more about it? Well, you came to the right place. My name is Kenny Simpson with C2 Financial, and today I'm super excited to go over all the nuts and bolts, some cool things, some VA loan hacks. So stay tuned. Let's jump into this video and let's get started. But before we get started, the most important thing that I want to do is say thank you. Thank you for your service. Thank you for what you do. And that's why, honestly, you guys deserve to have such a badass loan. Yes, I said badass loan to use something like this to go buy 1 to 4 unit properties. The VA mortgage is literally the best mortgage out there. There is no other mortgage that basically even compares to it. I mean, I hope by the end of this webinar, you guys can really learn what is required, what you can get out of it, but also how you can utilize it to help build wealth for you and your family, and maybe even help to like have somebody else pay your mortgage. Yeah, I even said that. So stay tuned. So a little bit about me and who am I and why should you even listen to me, right? Like, who is this guy, Kenny, and why should I listen to you? Well, again, like I said, my name is Kenny Simpson. I live in San Diego, California. As you guys know, in the military, we're a huge military town. We've got the payroll's big here. We do a ton of VA loans here. Military is moving in and out here. So obviously we do a lot of these products. I've been a loan officer for 18 years. I'm a mortgage broker by choice. And the reason why I'm a mortgage broker is because over the 18 years, I've learned a few things. I've learned that I want the best pricing. I want the best products. I want the best service. And I want the best technology for my clients. And so pricing, products, all that, nobody compares. Like the lenders, direct lenders, banks, they cannot compare to what we can deliver. We can even close VA loans here in 5-7 days. So we can make people super competitive. But a little bit more about me. I've been doing this, like I said, 18 years, funded well over $1 billion of loans. I've helped thousands and thousands and thousands of clients, and I've helped tons of VA clients too. I help them go from buying a home to buying a 1 to 4 unit property, right? Or 2 to 4 unit property. Here in San Diego, its cost of living is expensive. So that's why we're going to teach you about the VA loan hack that can help you and your family put you in a better financial position. So again, why should you listen to me? Because I've done this process of helping people get into buy a first-time home or buy an investment property or buy a second home thousands and thousands and thousands of times. It's not just me. I work with a team as well who are all dedicated here to help you to get the best service, to have the best experience, and obviously get you the best pricing to save you the most money. So now that you've heard about me, why don't we jump into the exciting stuff about the VA home mortgage, and let's get started. So the topics we're going to cover today are the simple. It's very simple. Their topics are simple, but we are going to dive into detail. So if you want, get your pen and paper out. If you're with your husband, your wife, significant other, take the notes, write down questions. Feel free to reach out to me. You can call me, you can text me, you can send, information, however you want to get a hold of me. Whether you live in California or another state, no worries, reach out. I'm here to help. I'm here to answer your questions. I'm here to educate you so that you can make the smartest decision for you and your family when it comes to buying a house and your financial future. We're going to talk about who's eligible. What are the requirements, important facts and information. We're going to talk about debunking the VA loan myths. Yep. Pros and cons of using a VA loan. Answer some of the basic facts and questions. And also, my favorite thing that I love to talk about, I love to teach people about, is the VA loan hack. But guess what? You're going to have to wait till the end on that one because I can't give you all the good nuggets up front. So anyways, let's get started. Who's eligible? A little bit more about the VA loan. So the VA loan is established in 1944. Since then, it's helped about 24 million veterans with loans, which is crazy. So a lot of loans. That's purchase, that's refis. VA home loans are for 1 unit properties. The funding fee really is to keep the program alive, and the VA does not originate your loan. Lenders, banks, and mortgage brokers do. So a lot of people with the funding fee, it helps. Remember, they're giving you 100% loan. The lenders and banks are taking on a certain responsibility too, right? So the government's guaranteeing 25%. So to fund this program, that's why they're charging the funding fee. Obviously, if you're disabled and stuff, that can go away. So the funding fee is required. So not like people like, that's crazy, it's super expensive, but it does help the program. And it's still, even though you pay it, it still usually makes sense. Who's eligible for a VA loan? Army, Navy, Air Force, Marine Corps, Coast Guard, 90 days wartime, 181 past peacetime. We have more information here about the dates and timing, but that's basically the nuts and bolts of it. If you have questions or if you're not sure about your eligibility, you can always reach out. We can tell you how to check it. In here, it will also teach you, obviously we're going to tell you where to go check it, your certificate of eligibility. You can go on the VA website. These are very easy things for you to do and your family to check to make sure your requirements and you're eligible for a VA loan. Who else is eligible for a VA loan? Select reserves or National Guard, 6 years member of an active unit. There's all these things below. Honorable discharge, place on retirement list, transferred to honorable services, continue to select reserves, 90 days under Title 32 with 30 days being consecutive. So there's a lot of things here, guys. Like I said, if you fall in one of these categories, my advice is reach out to me or another lender that knows VA, that understands it, that can help you to make sure you are qualified for your future mortgage or possibly to refi. If you already have one, then you're probably qualified. Who can finance? So a veteran by himself, a veteran with a spouse, a veteran with another veteran, and a veteran and non-spouse. So depending on how you do this, a veteran, a spouse, a veteran, they can most likely do 100% financing. The reason why I say that is maybe you're using your VA for a second time, meaning you already have a VA loan, you're trying to use it with somebody else that might require more down. But also too, a veteran and non-spouse or somebody else, they are going to require a minimum of 12.5% down, but you can still do it. So some people think because you have a veteran and a non-veteran spouse, maybe a friend or another family member that wants to go on with you, you can still do the loan. You're going to be required to put a little bit of money down, but you still get the great rates, no mortgage insurance and things like that. What can be financed? So the thing about VA loans, what you got to understand is that they are a little more particular, just like the FHA loan and the VA loan. They are not as easy and flexible as the Fannie and Freddie conventional rates loans. So you can't have, for example, you can't be buying a tear down or a fixer, things like that. They really want to make sure the home is move-in ready. If there's been any improvements or additions, you've got the permits. They need to make sure the AC is working, the hot water heating, the electrical, plumbing, the roof. There's no paint peeling, things like that. So you're really looking for kind of like no health and safety issues. And so if you are a VA and you're looking to use your VA and you're looking to put an offer in and you're not sure about a house, the best thing to do is take the listing, send it to your loan officer, let him take a look at it. And what I do is I go ahead and put it in front of a underwriter and say, hey, would this be acceptable? And based off pictures, they can usually give us some feedback of what you might have to fix or what would be acceptable. VA loan requirements. So again, single family, 2 to 4 units. It's different. So if you're buying a single family home, the single family really requires no reserves. You also could be limited to maybe a DTI of 65%, stuff like that. When you go 2 to 4 units, there could be a required for reserves. And also, if you want to use that rental income, if you do not have rental properties or experience of owning rental properties, sometimes lenders do not allow you to use that rent. But the workaround is you can hire a property management company and they can go ahead and manage it for you and you can use those rents, and that could be temporarily too. Reserves, if it's required, it could be 3 to 6 months. We would let you know up front when we do pre-approve you. If you're looking 2 to 4, I can let you know by running you through the automated approval system. Also, we reach out to an underwriter to make sure that we get that answer for you. So when you are going ahead and qualifying and pre-approving for a property, we make sure you check all the boxes. The other cool thing about the 2 to 4 unit, nobody has the answer. There's no rhyme or reason, but we have had literally people get approved up to an 80 plus DTI. You still have to, qualify. You have to get the DU approval on that. And there's other qualifications that might come with that, but still it is possible. So appraisals. We listed a bunch of things here, which we don't need to go through every little detail. You guys could stop on this slide. You could look through it. But basically, we're just going under the fundamentals that you just need to make sure, like I said, the roof's in good condition. There's no evidence of termite damage. The crawl space, easy to access and free of debris. No lead-based paint. No hazards such as improper, non-existing stale railing, exposed wiring. Really what this comes down to, guys, is health and safety. They want to make sure if you're buying a property, it's not falling apart. There's not structural issues. The roof's not caving in. There's not paint chipping. There's not issues that you have to come in with and fix. If it is so, it's not going to be a good property to put an offer in on, and that's just probably not something you're going to want to, do. So moving on for this, like I said, there's more detail in here. Is termite. So here in California, we do require a termite clearance and pest inspection. Not all states require that. So you'd have to look up if your state does, but if it does require it, simply have to have a pest control company go out there. If there is termites and they require any work or basically, repairing of stuff, you would require that to get fixed. Who pays for that? Could be you, could be the seller. That's all negotiable with your real estate agents. So VA facts and important information. So this is the stuff that starts to get really fun. We get to dive into some details. Here's some stuff that you might not know about. Here's some stuff that might, open your eyes or might go, So it could, credit you or discredit you. But here's some really great facts about the loan that I want to jump into. So I literally think this is the easiest loan to qualify for. High DTI, 80%. Like I said, we've literally got them approved. We closed them on 2 to 4 unit properties. You must meet the VA residual requirements. On this right here, you'll see a VA residual calculator. So you can see, we have the income expenses and it has to meet a certain number. So if you do not, even if you have a DU approval or an LP approval or AUS approval, you still have to meet the VA residual requirements. So I want to make that clear. So these go hand in hand. So when you get to the higher DTIs of 80% and stuff like that, the residual requirements can be tougher because obviously you're really pushing the ratios, you're pushing your debt to income, and the requirements, it's going to be tighter because you're obviously expenses are way high compared to income. So like I said, those people were able to meet it. We were able to close. And if of 2 to 4 unit property, we are able to use that rental income to help offset the cost of the mortgage. There is no funding fee if you have a disability. We put a note on here. Veterans with at least 10% VA disability rating also are exempt from VA funding fee, which come out to thousands of dollars in savings at closings. Also, you have to check on this. If you're 100% disabled, there are certain cities or counties or states that are actually, you don't have to pay for property tax. Crazy. So you'd have to check more on that with your local county, state, and see how that works. The funding fee, if you don't have disability, is 2.3% of the loan amount for the first time and 3.6% for the second time, except VA IRRRLs. So a VA IRRRL is a interest rate reduction loan, and that's basically call it like a loan mod. So if you have a 4%, we can just go no appraisal, no income, no asset. We'll go over a little bit more down the road on that and just quickly do 5-7 days, close your loan, no appraisal, no income, no nothing, just literally drop your rate. It's awesome. And that would be the VA charge, a 0.5 point for that. Can you have a non-co-bar, not wife? Yes, we mentioned that before. That will require at least 12.5% down. The VA IRRRL that we just mentioned before is the interest rate reduction refinance. So it's great. It's one of the most powerful things. Like I said, if you have a 4% and rates are 3.5% or 3%, you have to meet at least a 0.5 point in the reduction of the rate. And then there's no income, there's no asset, there's no appraisal. You literally, like with our lenders, how fast we are, I literally knock these things out. Some of them were clear to close in 3 days, 5 days, 7 days. We can close this literally in 2 weeks, a week and a half, done. Easiest process, so awesome. Great way to save money for your family. So one of the huge perks of the VA loan. Obviously, you'd still have no mortgage insurance, things like that. It's just literally we're just dropping your interest rate. No, like I mentioned, no income, no assets required. Collection. So a couple of things we want to mention about, like I said, I'm trying to bring up topics that you might not think about and might not know about, so might come up and you want to address. So if you're looking to get pre-approved and there's issues on your credit and stuff like that, or other issues we're going to go through here, you can proactively, reach out to lender, reach out to me, and you can start going through these to deal with these challenges up front. So the last thing you want to do is go get pre-approved, go get an escrow of a house, and then you have credit challenges or collection problems or things like that that you haven't cleaned up. Let's get them cleaned up now. That's why you're maybe watching this video, what to prepare for, what to nail down before we go get that pre-approval, before we go put that offer in on that house. So if a collection is in minor nature, it usually does not need to be paid off as a condition for the VA loan. So if you have a massive collection, like $5 or $10 grand, they're probably going to make you pay it. If it's minor, $500, $1,000, they might make you not pay it. But look, if you do have a collection, it's hindering your credit, I'm going to push you to pay it. I'm going to push you to call that collection agency to pay them off, ask for a deletion letter, not paid in full, so we can try to get that off your credit report, which would actually boost your credit. So I would be pushing you to do that, because why would you want anything negative on your credit report, right? We don't want that. We all want perfect credit. So why not work on it? Why not focus on it? And while you're buying a home, there is no better time, right, than to deal with it. Judgments. Judgments must be paid off. Veterans borrowers can't be delinquent on federal debt, including tax liens, student loans, and stuff. So you have to make those payments on time. They're going to want to see, some payments. So like I said, when you're getting pre-approved, it's always good to get pre-approved maybe 6 months out, 90, 120 days out, because if you have issues, we can deal with them and we can get them buttoned up, and then we move on. So when we issue that pre-approval, when you put that offer in, it gets accepted. When you got to do that refi, it gets done. There's no delays because of things you didn't know about. That's why you're watching this video. That's why we're educating you to get smart, to make sure we nail down these items. Okay, moving on. So debunking the VA mortgage myth. This is my favorite because there's so much false information. There's headlines. My neighbor said this. My other buddy said this. My realtor said this. Look, let's go through some of the common stuff that I hear that is absolutely untrue. Number one, you can only use your VA loan once. Incorrect, not accurate. You can use your VA loan over and over. So if you have a VA loan, if you sell the house, you can get another property with a VA loan. If you have a VA loan and you refi into a conventional loan, you can do another VA loan. If you have a VA loan, you want to refi it 4 times because of interest rates go down and you take cash out, you can use the VA loan. So if somebody tells you you can't use it more than once, do not listen to them. If you don't use your VA loan, you will use it. Not true. I've literally had people come to me, owned homes for 20 years. They've never used their VA loan. I literally closed somebody last year. They always got jumbo loans. I said, why aren't you using the VA loan? They're like, it doesn't make any sense. It was a jumbo loan here in San Diego. We got him the most incredible 15-year fixed rate, and I think he had 10% disability. He was going to conventional. We smoked it. We knocked it out of the park for him. So he never used it, and it was 25 years ago. So perfect example. If you have it, you should really look into using it. If you have disability, my goodness, it's the best rate terms you can get. You can only have a max DTI of 49.99. Could that be true? Absolutely, right? Depending on your credit score, depending on things like that, it has to approve. But we mentioned we can go to 80, we can go to 65. So 49.99 is not true. You could only get approved for a VA loan for 45, depending on your credit score, right? There are tiers. But 49.99, you could definitely go over. So if you're reading something online like, the max ever for anybody, completely untrue. VA loans are harder than other loan products. That is completely not true. Are there different guidelines? Absolutely. Could their appraisals be a little bit more, anal and things like that? Absolutely. But we went over it. So you should be putting offers in on properties that could get accepted. But as far as a loan, very easy, quick. Especially with us, we literally submit files. We have same day or next day approvals on VA loans. That's literally how fast. And I'm telling you, we have amazing pricing. I throw this out there because not all lenders are created equal. Not all pricing is the same, guys. It's really not. You really need to make sure that you're going with somebody that understands VA loans, that's been doing this a long time, but also has great pricing because it saves you money in the short term and long term. You cannot close a VA loan fast. That is the biggest myth. No, you can close a VA loan. We've literally closed one in 7 days, like done, completely done. So I think I closed a VA loan roll maybe in 5 days. I don't even remember, but 7 days, got a purchase done, no problem. You cannot rent out your home if you have a VA loan. That is completely incorrect. What they like you to do is have the VA loan for a year. But if you bought in San Diego in 6 months, you get orders to go overseas or go move to Virginia or Florida or somewhere else, and you got to rent your house out, no problem. You cannot purchase another primary residence with a conventional or FHA loan if you have a VA loan. Completely not true. We do it all the time. And you cannot use rental income from you 2 to 4 units help qualify. Not true. Remember, we can use a professional management company, and that if we need to manage those units during the process, and basically you can use those rents. The other thing is you cannot refinance to an FHA and conventional loan out of VA. Completely not true. So what we do a lot here in San Diego is people have bought in a property. Maybe they added value to it. Maybe the equity went up. They went ahead and they refinanced out of it into a conventional rate. They stayed in that property 6 months, 8 months, a year. They went out, they turned that into a rental property, and they went out and they're buying a 2 to 4 unit VA. They're buying a 2 unit VA. They're buying a single family VA. You can do all these things, guys. They're all possible. Just working with the right team, the right lender that understands this stuff. It's great. Pros and cons of VA loans. So let's go through some pros and cons here that you might hear. Let's see the pros. No down payment, no MI, huge. High DTI, huge. Lowest cost and rates, absolutely. Compared to FHA or USDA loans, I don't really do USDA, but FHA, it's very comparative. Low FICOs. So the thing about VA is they technically don't have a credit score. There's no minimum. But most lenders, like all of them, have an overlay to guidelines. So that means they want a minimum of 580, 500, 550. So if you have a low credit score, reach out to me, reach out to your lender. We can go down to, I believe, a 500. But if you have a low credit score, we should be looking at why is it low and what we can do to get it up and help to fix that. And remember, to go back to what I said, getting that pre-approval 6 months, 90 days, 120 days out is really helpful. Flexible refinance, we talked about the VA IRRRL, super easy, quick. It's like a low mod, shorter wait time from bankruptcy or foreclosure, absolutely. And the other thing is these loans are assumable, so that's huge too. Cons, there's a funding fee. Nobody really likes to pay that. I get it. It's always like, oh, you can finance it in, but it does stink, let's be honest. You cannot use these loans to purchase an investment or vacation property. Could they turn into investment property later because you got to move or something? Absolutely. Appraisals are more detailed, as we went through earlier. This is not desirable for some sellers, but if you have a good agent and I can talk to the listing agent, we can definitely help sellers realize that you're pre-approved, you're ready to go. So I kind of believe that is a con, but I feel like we don't have many issues with that. The only reason why some sellers don't like it is that the appraised value doesn't come in. Some people have zero money to put down. So that's why they wouldn't want to go with you. It's more like that. So if you had VA loan, let's say you're going to use it, example, and you're going to buy a $700,000 property here in San Diego. Let's say you had $100,000 in the bank. You don't want to touch it because why would you? And that value came in at $690. The seller might accept you more because you're like, well, he has $100,000 in the bank. He's willing to come in with any difference. That's good. But if you are buying that $700,000 home and you got, $15,000 in the bank, just enough for closing costs or whatever minimum, right? Even if you're going to get a gift towards the closing costs or a seller credit or a lender credit or credit from your agent, if you don't have that money, sellers are like, but what if it doesn't come in? So that could be a problem too. So that's really why they're saying no. Just letting you know that might not really be disclosed. It might not be out there in the general public. That's typically why sellers do not want to take up your offer if you can't deal with, the value coming in lower. The other bummer is condos need to be VA approved. So a lot of them aren't. You can get them approved pretty easily, but it is a process and a pain. So a lot of buyers tend to steer clear of buildings that are not VA approved. And the funding fee increases after the first use. That's kind of a bummer. Obviously, if you're disabled, it's great. You get it waived. But if not, the funding fee does kind of stink. And the other bummer, I think, for a lot of people is the loan can exceed market value. So if you are buying a loan with 100%, then you got 103% with if you got to do the funding VA on there. The market change, you put nothing down. So you could be underwater for a particular period of time. If you live there long term, not a problem. If you have to sell, that could be a problem. If you have to do a VA IRL and lower the payment, remember, there's no income, no asset, no appraisal. We can get that done for you. So now we're on to the facts and questions. So let's jump right into them. These are the common facts, the questions that I get doing research online that I kind of want to answer for you guys. But mainly, these are the ones typically you're going to ask or I've gotten over the years. How is it different from a conventional and FHA mortgage? Not to get into total detail. Let's just pick it. Conventional, you cannot go 100%. If you don't put down 20%, you could have MI. There is a lender paid MI option, but the rate goes up. So interest rates on conventional are higher. FICO requirements on conventional are higher, and DTI. So there's a big difference there. So the cost of the loan, the qualification stuff, way more flexible with the VA. FHA, interest rates are typical, right? You kind of same. You do have to put the 3.5% down with the FHA at a minimum. The minimum credit score, they could be the same. But the other thing with FHA is they got 0.85 of MI. So MI is pretty costly. And then they kind of cap out about 56.99 on the debt to income. And so if you keep hearing that term debt to income, just so you guys know, that is your debt to income ratio. So that is let's say you make 10 grand a month and your bills are 4,000 divided by 10, that's 40%. That would be your debt to income, just for an example. That's why I go over that. So it can be higher with FHA, but overall, the VA is 100%, no MI, low rates, low cost, super high DTI. The difference really is there's better rates, better terms, cheaper. It's just a better loan. So that's really to sum it up. Minimum credit scores we went over. There is none technically, but lenders have overlays. Like I mentioned, I'm about a 500, but if you did have a 500 or lower, the guidelines change and things like that. So we really would want to dive into why that is lower and fix that problem. That's what I think. Because there's got to be some issues on your credit. How fast can I close a VA loan? Honestly, 7 days, no problem, literally. We can get it done on a purchase, on a VA IRL, easily. Do I need to make a down payment? No, you can. I had a VA guy come in. His dad gifted him the money. He wanted a certain payment. Bought $1 million property, put down $150,000. Thank you, Dad. Kudos for the down payment, for the gift. No problem. Is there mortgage insurance? Absolutely not. There is no mortgage insurance. Does my spouse have to go on the loan? No, she doesn't, but there is a but. But we do need to look at her debts. So her liabilities, just like on an FHA VA loan, we have to pull her credit. She doesn't have to be a loan, but if she has any liabilities, they will factor into your DTI. And actually your residual income. So it could affect the loan. Keep that in mind. Typical closing costs for a VA loan. You've got title, escrow, lender fees, appraisal fees. You have to impound. That means you have to prepay taxes and insurance because the lender is going to pay them. So typically, just to ballpark it, let's just use a $500,000 loan. I would typically say 2% is realistic of your total closing costs. Remember, you can get a seller credit. The lender can help you with a credit. Your agent can help you with a credit. You can save up the money, but that is closing costs. That would not include points and things like that. That's just typical third party. And then most of that money is going to go to, prepaid taxes and insurance. That's going to come out of your payment and stuff like that. So that's another time, another conversation. But overall, just factor in about 2%. I think it's safe. If the loan amount's lower, that could be higher, but I'm just giving you based on the 500,000. Next question. How does my certificate, we put COE, how does my certificate of eligibility work in regards to my purchasing power? So certificate of eligibility is obviously where you pull your certificate of eligibility to see how much you qualify things. Look, that doesn't affect your purchase. If you've used your VA loan, you have it on another property and you're going to try to reuse it again, that could 100% affect your purchasing power and the down payment. But if your VA, if it's fully accessible, you should be good to go. It should be unlimited, so you should be good to go. The only other time, if you co-sign on somebody else's loan or you have another second mortgage there, right, that you are going to keep and you're trying to buy another home using a VA, maybe with somebody else, that could affect your down payment. Otherwise, you should be good. And remember, there's no maximum loan amount VA technically. There are lenders going to have overlays, but there's lenders that will go $3 million plus whatever. So keep that in mind too. How fast can I change the VA loan to another loan product? Basically, the VA needs you to keep the loan. You can't refinance to an IRRRL. You can't refinance out of it or anything like that. They want you to keep it for 210 days. So if you close with me and you say, hey, let me know when I'm eligible to refi out to conventional or FHA or do an IRRRL, we can mark the calendar and call you back then. But like I said, it's about 6 months or 210 days or 6 total payments. Can I purchase another property using my VA loan if I already used the VA loan? Yes, you can. But we mentioned prior that you could be capped on loan to value of how much you put down. So you might have to put more down. You could put 10, 20, 25% down. So would it be worth it or not? It could be. So that's something you just want to get reviewed and looked at. The VA loan hack, my favorite part of this video, because if you guys are a veteran, again, thank you for your service. You guys should really pay attention here, especially if you live in places like California or expensive markets where housing is expensive and you're trying to save money and you feel like you can't get ahead, you're getting behind. You should really consider the VA hack. This VA hack in certain markets could work much more better in places like San Diego. Why? Because of affordability, because of the rent and things like that. So let's jump in. We're going to go through, and I'm also going to give you a great scenario that we can kind of go through before we wrap up this webinar. So the VA investment property owner occupied. Yes, I said VA and Pest investment property. Kenny, well, the VA doesn't do investment properties. You're absolutely right. They do owner occupied properties. But if you have a 4-unit property, you're living in one, you're renting out 3. That's 3 rentals. That's an investment property. That's 3 people paying you to help pay your mortgage. So let's go through the hack. What you do is you live in, so 100% financing, no MI, crazy low rates, right? You live in one, you rent out the 2, the 3rd, the 4th unit, you collect the rental income, right? To help offset, pay your mortgage. Maybe you're buying it where you can bump the rents up, fix them up. It's like an investment property. So everybody wants to go and buy an investment property. I'm like, why don't you just buy a 4-unit? You live in one and rent the others. Here in California, we have some where there's a house in the front, there's 2 in the back, there's 3 in the back, there's 1 in the back, whatever it is. As I mentioned, buy a 4-unit, 100% financing, no MI, have others pay your mortgage. There isn't a reserve requirement unless you have, you're funding a 3 or 4-unit property and you can use your rental income to qualify. Need cash reserves to be able to document to your history of receiving rental income. So if you don't have that, there are some reserve requirements. This is why we get pre-approved, right? So we have to know what they are. VA requires 3 months PITI reserves in case. That's principal, interest, tax, insurance. So let's say your payment, you buy this $1 million property, your payment is $6,000 all in, right? So 3 months, that's $18,000 you have to have in checking, savings, stocks, bonds, 401k, retirement, things like that. Borrowers may also need to have cash reserves if they're more than 12 months removed from converting a primary residence to rental. We're just giving you some overlays. So if you're transitioning properties, if you have multiple properties, there just could be more reserve required. But we can tell, anybody can tell you this up front if they do the proper pre-qual, call the underwriter, run you through the automated approval system. This is why we get the pre-approval. Also, my favorite thing, you can vacation rental out, VRBO, Airbnb, et cetera, the units to make even more money. So let me stop right there, guys. This 4-unit hack is huge. It literally, in some markets, you can literally get paid to live where you live or cover your entire mortgage. So what could you do? That could save money to go. Maybe somebody wants to go back to school. Maybe somebody wants to start a side hustle. Maybe somebody wants to save for college. Maybe you need to save money, just overall because there's bills, there's expensive. But also, maybe you just want somebody else to pay your damn mortgage. You don't want to pay it, right? Like, why not? Or better yet, why not stack the money to save to go buy an investment property? Maybe you refi out of this one and buy an investment property in the future. So it's such a great hack. This is one way how to get ahead. And so I met many people that built real estate portfolios here in San Diego doing this method. Let me give you one example. I have a friend that's in the military. He basically bought a $2 million 4-unit property in a beach community here. Very popular. So he's owned this now. He bought at a great time, got a great rate. So what's happened now? He basically has lives in one, has a long-term rental in one, and vacation rental is the other one. At the end of the day, he literally lives rent-free, and he makes $3,000 a month or so in net income. So he's able to stack that cash and go buy another property. On top of that, he built up equity. He's pulled out a line of credit because he has a crazy low rate on the first, pulled out a couple $100,000, and now he's going to go deploy that into a new property. And he's going to put that down and make even more cash flow. So if you don't understand this hack, you want to learn more about it. I deal with a lot of real estate investors. That's why and people that come here to San Diego are really starting to teach them to use this as an asset, to turn this into from a liability to an asset, to have other people pay your mortgage. You get really smart to really figure out this hack. Please reach out to me. I'd love to dive in more of how you can do this. And I know some people are like, oh, I want to buy a single family. No, why don't you buy a 3-unit? Like, start your investment journey now. Start saving money now. What better is to have somebody pay your mortgage or cut the cost? I love this. So I'm very passionate, as you can tell, about this and about the VA loan. So once again, guys, I really appreciate your time. We dove through a lot of nuggets, a couple of just bullet points to go over. Number one, you always want to know, we need to know certificate of eligibility. Number two, what's your credit score? Number three, what can you qualify for, right? And number four, are you getting the AUS approval? Can you get approval and can you meet that residual income, right? These 5 important tips and tactics about this loan. The detail stuff, leave that to your lender. Leave that to your agent. They should be working together. And my piece of advice to you is utilize this loan. The other hack that people are doing is they're buying a house using their VA. They create value by fixing it up. Then they refi out as an owner-occupied, maybe 5-10% down as a conventional loan. If it makes sense, they'll rent that house out. If it doesn't make sense, they might not do that and sell it. Then they collect the cash flow. Then they're going out and taking the VA loan and buying a 4-unit, right? So these are all the things you can do. This VA loan has more of value to you than you probably could even imagine, right? Again, thank you for your service. I appreciate your watching. Share this with others. Like, give me comments, feedback, anything at all. Again, my name is Kenny Simpson with C2 Financial. I would love to help you out. I'm telling you right now, we have the best VA rates around. We have the best service. We know exactly what you're doing. I am here to help you. Let's close some loans. Let's get you in some properties, and appreciate you listening. Have a great day.